Hi, everyone. This is Jason Burek of Wall Street for Main Street. Welcome back for another Wall Street for Main Street podcast interview. Today's special guest is a returning guest and one of our most requested returning guests. He's a former vice president of Sprott. He's worked for decades in the commodities and natural resource industry, financing hundreds of mines into production. He also is a credit analyst. Rick Roll of Roll Investment Media. Thank you for joining me again.
Always a pleasure, Jason. Thank you for having me back.
So, Rick, we're recording today on Tuesday, April 1st, April Fool's Day, 2025. The US dollar gold price, it touched, I think, today at $3,149. It's corrected down substantially over the last hour or two since I've looked at it. I want to get your thoughts before we start talking about gold and gold stocks on the Trump administration, some of the policies that he's been putting out with executive orders, talking about eliminating red tape for energy projects, oil, natural gas, uranium mining, copper mining. Do you think we're actually going to see some of these commodities projects fast-tracked here in the United States?
I think we may. I think there is probably political favor on both sides of the aisle for measures that are seen to strengthen the economy and generate high-wage jobs. Towards the end of the Biden administration, you will remember the absurdly named Inflation Reduction Act, which was really a very large spending bill that prescribed, among other things, subsidies for domestic uranium production. That struck me personally as being very ironic 5 years ago. They would have publicly reviled somebody like me who was a uranium speculator, and now they propose to subsidize me. Now, Jason, I must say I felt a lot cleaner when I was hated than when they were proposing to subsidize me. There's only so much, of course, that Trump can do for two reasons. One, executive order is the first step, but remember, we have a tripartite government in the United States, federal, state, and local. And assuming that he can put all of his stuff through Congress rather than by executive decree, which is what is required for funding, he still needs to deal with state and local regulation. One example would be the Resolution copper deposit in Arizona, one of the great undeveloped copper deposits in the world, well located in Arizona, close to things like copper mines, copper miners, water, power. This mine has over 1 billion tons of 1.5% copper. For reference, the average mine grade of copper worldwide is about 0.5%, so 3 times the global grade. And this deposit has been mired in permitting for 26 years. There isn't very much about an executive decree that's going to change that. On the other hand, a deposit like the copper camp in northern Alaska, where there is widespread local favor, and the development of that copper mine was constrained because President Biden wouldn't allow a private toll road to access it. That could be something that a Trump administration could unfreeze. So I think the outlook is decidedly mixed. A second problem, I think, for Mr. Trump and for those Americans who agree with his policies would be the fact that it would appear that Mr. Trump is fighting an awful lot of fights simultaneously. Normally, a prudent fighter fights one fight at a time and wins it before he or she moves on to the next fight. And my suspicion is that the very broad agenda that he has, assuming that there's an agenda as opposed to a series of sound bites, is so large and so diverse that it is unlikely that he has enough political clout and credibility to win all the fights. And I think in order for him to be effective, he has to pick a couple of fights and fight those first.
Well, I mean, in theory, it sounds like smart. It would be smarter rationally for him to fight one fight, but he's being sued in everything. So, I mean, he's trying to remove the funding, right, for woke policies and transgender athletes at the, government schools or university level, and then he's being sued. So every single thing he's trying to do, the Democrats or whatever other entity is suing him in the courts now. So it's not like he has a choice in there. He's being sued in pretty much everything.
Well, that either means that you fight the fights that really matter to you. You follow what I'm saying? Every fight that he wants to win is going to require resources. And the fact that he is being attacked everywhere is all the more reason for him to concentrate his resources on the fights that are worth his while to win.
So you're saying that him picking, say, a senior executive at Newmont Mining and delegating and making him what the U.S. domestic stockpile copper and commodities are, that's not really going to help much. That it's more reliant on what Congress getting the funding and eliminating a lot of the red tape that his commodities are is not going to be able to help that much with all the red tape and stuff.
Unless Mr. Trump is willing to put a lot more political clout and make an issue of that at the expense of other issues which are important to him. No. Putting somebody in charge of an agency and hoping that that change of leadership at the top will cause something to occur is naive at best.
Yeah, I mean, it's like it's a press release. It seems it's mostly marketing. I mean, like he's approved the drilling on federal lands for oil and natural gas, but the oil price. I actually think, in my opinion, Rick, I think he wanted lower oil prices for various reasons. So the other countries that are producing oil, like Russia, Iran, Venezuela, he wanted lower energy prices. He thinks lower energy prices will help reduce inflation. So he doesn't actually want a huge spike in the energy prices.
I believe that a reduction in energy prices would be good for global consumers. And so I will take him at his word that he wants that good thing. I'm not inside his head. And to be honest with you, I concern myself personally a lot more with individual companies than I do the preferences of the president. But assuming that he believed that lower oil prices were good for the economy, I think he would believe correctly.
So you
Wouldn't be as good for me as an oil and gas investor, but he has no obligation to me.
So you haven't noticed yet if the uranium mining companies here in the United States that are close to restarting, if they're getting like a fast track on some of their permits?
Remember that legislation in the United States is tripartite. Mercifully, most of the recoverable uranium in the United States is in Texas and Wyoming, which, from a regulatory point of view, are already pretty good states. The threat that the Biden administration has, that I think Trump has repeated, is the idea that the U.S. will, in addition to cutting red tape, directly subsidize the industry. Um, I hope they don't do that uh, because, as much as it would benefit me, I don't like the idea of stealing money from taxpayers to subsidize individual issues. But if they did, it would obviously change my opinion as to the level of support that they were proposing to pay or to orient towards extractive industries.
Would you also say that there's a bottleneck too with U.S. uranium enrichment? Because didn't Russia have almost a monopoly? And I think Kazakhstan too. Wasn't there almost a near monopoly for a lot of the uranium enrichment? And then the U.S. had to import a lot of that. But here we are 3 years later with the Russia sanctions, and now like obviously Russia is not going to give us the enriched uranium for our nuclear power facilities. So it seems like the U.S. needs to start investing into this for domestic facilities to expand that so we're protected.
Yes and yes, but people need to understand that we assigned the Russians that monopoly in the agreement between ourselves and Russia that led to the downblending of so many Russian warheads and so much Russian weapons grade enriched uranium. As an added economic benefit, we allowed them to have the blending and re-enrichment capacity that would see their weapons grade material turned into fuel grade material, which is to say that we are the partial authors of that. As relations between us and them deteriorated for other reasons, it was us that went back on our word in that context, not to defend the Russians. But the truth is that we are, or we were, the authors of that Russian oligopoly in enriched uranium. It was a partial trade-off for the Russians' agreement to mutually downblend weapons grade uranium into fuel grade uranium.
Do you think that the big technology companies are still going to keep investing over the long term into expanding nuclear power facilities?
Yeah, I think they have to. There seems to be broad-based public consensus that non-carbon generating sources of electricity are important, and there is no doubt that as the world population expands and as GDP per capita expands, that we're going to need more energy. We're going to need more of all forms of energy. But from the point of view of, in particular, of the high-tech companies, high quality energy, which is to say energy that's available 24/7 and doesn't generate carbon, is in particular demand. So my suspicion is that while uranium will be an increasingly important source of fuel, it will be particularly important in those private economies like the United States that can afford it.
Yeah, and I think that the data centers, I don't think they're going away. So we see like the stuff with artificial intelligence software, and Rick, you and me aren't tech experts, but these companies are spending a lot of money developing software. Seems like every month or two there's an innovation. And so, like, there was a panic, what, 4 or 5 months ago over the DeepSeek artificial intelligence software in China that is going to use a lot less power. Well, I mean, like, there's still a lot of construction for a lot of these data centers. I think, like, the big tech companies already paid tens of billions of dollars in capital expenditure, and the construction hasn't even started on most of these facilities, and they all have to secure what power agreements for either natural gas or nuclear power ahead of time.
I think that's accurate, and I think that's just one use for nuclear power. It's the one that attracts a lot of our attention in the West. But I think we also need to recognize that, at least for the last 10 years, the most important source of new demand for nuclear power has been nations whose conventional demand has been growing rapidly, in particular China. The truth is that there are a broad range of good applications for nuclear that I think will drive the market over the next 10 years. People who are looking for a spike, a near-term spike in the uranium price as a consequence of technology, be it data centers or small modular reactors, are going to be disappointed. These are sources of demand that are 5 years out, or 7 years out, or 10 years out. What has mattered over the last 3 years has been the pace, real or imagined, of Japanese restarts. The fueling cycle on nuclear power plants that aren't merely planned or under construction or financed, but rather built and could impact demand in this fueling cycle.
Could you maybe tell our listeners how long it takes for a copper mine? Say if the copper price stays above $4.50 a pound or $5 a pound, how many years does it take for a copper mining project to go from, say, a pre-feasibility, feasibility, construction, and then into production?
Your audience will hate me for this. In an efficient society like the Congo, you can get through permitting in 2 years. In an inefficient society, one with high political risk like the United States, it can take 25 or 30 years. There's no one size fits all. The regime in the world that has the best experience permitting and constructing copper mines is Chile. And it would appear that the permitting cycle in Chile has increased from 4 years to more like 6 or 7. And from there, of course, you have the construction cycle. But my suspicion, Jason, is that if you average all of the jurisdictions in the world, from the point in time that you commissioned your feasibility study, that probably takes 2 years to complete, to the time that you were permitted and broke ground, probably between 8 and 10 years. And remember that after nameplate completion, or economic completion, pardon me, it still takes 6 months, 9 months, 12 months for the mine and the mill to shake in. So I would suggest that the amount of time that somebody would expect it to take from feasibility study completion to real economic completion, which is to say producing at nameplate capacity in terms of volume and price, probably a decade if they're efficient.
Wow. So if Trump is issuing executive orders talking about like rare earth elements that we need to start stockpiling copper, I mean, he's not going to see any of that come to fruition then, it sounds like.
I mean, he could help the process. If he decides to stockpile rare earth elements, there is a market. He can buy them, or he could begin the process. I don't know if he'll do this or not. he could begin the process of encouraging or even subsidizing rare earths extractive capacity in other countries where the discovered deposits are of higher quality and larger size than they are in the US.
I mean, that's what the talk of Greenland, but you've said in prior interviews that while Greenland does have a lot of rare earth reserves, that they're low quality.
Yeah, I would suspect that the country that is the best endowed with delineated high quality heavy rare earth deposits in the world is probably Brazil. The country that probably has the best potential to yield world-class deposits is probably Congo. We have a deposit in the United States that's a big deposit. It's produced since World War II. That's Mountain Pass in California. Whenever it's returned to production, that return to production seems to coincide with a loosening of Chinese policy. Maybe that's intentional. And the Chinese are so much more efficient at producing rare earths that the price at which they're willing to sell the rare earths oxides for is lower than the cost to produce the stuff at Mountain Pass.
Well, also Mountain Pass doesn't have a lot of dysprosium. It's mostly what a light rare earth facility.
Yep, yep, correct.
Yeah, so you need the for our listeners out there, you need more dysprosium to make the neodymium iron boron magnets or the rare earth permanent magnets, which is what miniaturizes all the technology for smartphones and electronics and electric vehicles and all those things.
And sadly, at least so far, the United States doesn't seem to have any globally competitive discovered deposits of applicable rare earths.
Well, I mean, they're sending press releases about Ukraine, but then what Zelensky's backing out of the deal. But even if they started immediately on a potential Ukrainian facilities, that could take 10, 15, 20 years.
Yeah, I mean, it seems to me that the only source of near-term supply available to a U.S. dominated supply chain would be in Brazil.
Yeah, unless they come up with innovative solutions to remove some of the dysprosium from the rare earth permanent magnets, the neodymium iron boron magnets. So we'll see. I know they're working on that like 10 years ago. I think Japanese scientists at some of the Japanese technology companies were working on it. I'm not sure if they had perfected it or not.
Nor am I.
Now, I want to transition to gold stocks since we're at $3,100 gold. Now, you've been on a lot of different cycles, Rick, over the years. Are we at record amounts of free cash flow for a lot of these producing gold miners?
No, but the gold miners are not, well, they probably are on a price to pre-cash flow basis as attractive as they have ever been. What's probably more important is that they're the relationship between net present value, which is to say cash flow now, and cash flow in the future at current prices and costs with proved developed reserves. The ratio between the enterprise value and the net present value of the gold miners is the best I've seen it in my career.
Oh, so you're saying the spread. So there's like a, for our listeners out there, you're saying there's like a huge spread, which means an opportunity for an investor or speculator. So if they run the net present value future discounted cash flows, it says what the gold price should be at a discounted cash flow at this valuation. Meanwhile, the share valuation at the current valuation is far lower.
Correct. And I think that's a more valuable measure than simply annualized cash flow, because annualized cash flow doesn't take into account whether or not the company will only enjoy that cash flow for 2 years or whether it'll enjoy it for 10 or 12. The price cash flow ratio is a ratio that works better in more stable businesses. But a business that's in constant liquidation, which is what a mine is one that really has to be analyzed on a net present value rather than an annualized free cash flow basis.
Now, in terms of mergers and acquisitions, what do you think would trigger an increasing amount of mergers and acquisitions in the space if that gap you're talking about between net present value at a discounted cash flow basis versus the valuation of the shares, if that gap stayed at these levels or went higher? Or do you think that these other the producing miners, say like a Newmont Mining, a Barrick Gold, Agnico Eagle, Alamos Gold, the companies that actually have free cash flow, are they looking to use their free cash flow on other things like increasing dividends or share buybacks instead?
The answer is yes to all of that. we're already in an acquisition cycle. We've seen in 2024 the largest and best gold miners react extremely well in the market, but the other gold miners have lagged. When the biggest and the best increase their share prices, they lower their cost of capital and they lower it relative to the rest of the community. One of two things can happen. Investors can do value arbitrage and go down the quality trail, bidding up the shares of the smaller companies, or the big companies take over the smaller companies. That's what happens. Um,
Do you think there's still bargains out there like huge mispricings where some of these juniors that have a near term project, let's say they have a feasibility study and they haven't raised the capital to build a mine, some of these reserves are super deeply discounted relative to metals prices?
yeah, I don't know that the majors will be the guys that take those over. We're also in a period where there's, lateral mergers. The amalgamation is an example of Equinox and Caliber is an example of that. There's no particular strategic rationale for that amalgamation. There are two companies that have mines that are coming into production. So future cash flow will look attractive relative to current cash flow. But that merger took place to create a bigger, more liquid company that got more passive and index buying. And we will see that. We will see single asset producers, which are regarded by the market as riskier than multi asset producers, taken over by multi-asset producers, which eliminates the discount. We're going to see mergers and acquisitions in circumstances like we just saw with Newmont, where they acquire Newcrest, but in the course of acquiring Newcrest, they sell off 9 or 10 smaller mines that have distracted their attention from their bigger mines. Make no mistake, we're coming into a 2, 3, 4 year hyper M&A uh, market.
And it looks like to add your points there with Newmont Mining that SSR buying with the Cripple Creek in Colorado that has benefited them because now they're more diversified away from just having Choppler. So now they have more diversified cash flow in the United States. They're a more balanced company compared to the past, where I think what Choppler was 40% of their revenues or cash flows annualized, something like that.
Yeah, we'll see. SSR traditionally has done an okay job with acquired assets, but very often what happens, and I'm not accusing Newmont of this in isolation, but when a big company like Newmont has 20, 22 mines, they don't put the A team on the C quality mines. They use that mine as a source of cash. They don't necessarily make the reinvestment sustaining capital investments that they need to do. In other words, they become almost orphaned assets. When you take an asset that is an orphan for a company like Newmont that's producing millions of ounces a year, and you hand it over to a team that's made a specialty of revitalizing cash-starved mines, you have a circumstance that's good for the seller and it's good for the buyer. That's an important note. It's important to note too for people who watch Newmont, as I do, that there were sort of widely published estimates that suggested that they would get $2 billion for the assets they disposed of. And I think they're at 4.2 billion and counting. Uh, this improves their balance sheet. At the same time, it frees up management time and attention and sustaining capital investments for the big mines that make a difference to them.
And you've talked on prior interviews about the Eleanor mine, I believe, in Quebec that was producing for Newmont, but you said that talking about how they didn't put their best people on there, that one could be fixed by another operator, mid-tier miner that actually put more resources into it and focused on optimization, that was one of your key mining targets for that.
Absolutely. And, I think what they did at Musselwhite, I think around their portfolio, that Newmont made a highly intelligent decision to divest themselves of any tier two or tier three mines that they had, uh, so that they could, lavish love, care, and attention on things like Penasquito, great, great, great big mines. Or, and of course, the Nevada joint venture that they have with Barrick. I think it has the potential to be very good for the acquirer and very good for Newmont too. And I'm using Newmont as an example. I think that to the extent that big companies buy smaller companies and that there are tier two assets that they get in the package, that increasingly they'll dispose of those tier two assets to smaller companies for whom that asset will generate greater benefit.
Is there going to be any way for Newmont Mining or Barrick Gold to avoid adding a lot of copper mining production, or are they basically, because they're producing 5 million ounces per year, they're looking at these large, massive open pits that you say they're tier one, these are just absolutely massive mines that they basically can't avoid producing a large amount of copper?
That would be my belief. It could be that you will see some sort of reverse stream, which is to say, rather than the traditional circumstance where the copper miner sells a gold stream, perhaps gold companies, in a sense, in the sense that they want to appear to be more gold centric, would sell a copper stream. They'll be challenged to do that because gold cash flow, isolated gold cash flow in a stream, sells at a substantial premium on an EBIT basis relative to the cash flow from the copper. Isolating the asset that sells at a lower multiple to preserve your high multiple on the other commodity seems to me to be sort of a stretch concept, but it may occur.
Yeah, normally companies like Altius Minerals, like they might be interested in a smaller copper stream or copper royalty, but when they get like a gold stream or a gold royalty, they normally want to cash out and sell it at a high cash flow multiple and reinvest it into cheaper, more value added royalties or streams that are selling at lower cash flow multiples that are normally not gold related.
Correct. Brian Dalton has said if he can sell a asset for 15 times EBIT and use the money to acquire an asset for 6 times EBIT, then it seems to him to be very simple arithmetic.
Yeah, the problem, Rick, is that while Altius is a good company, they're not big enough to handle like going and buying like giant copper streams from some of these miners like Barrick Gold and Newmont. You'd need an absolutely massive entity to handle that.
And the bigger problem is that if you isolate the copper stream will sell at a lower multiple than the gold stream. It's a much less efficient financial
Well,
mechanism.
I
There are
wouldn't.
certainly companies, BHP, Glencore, uh, Rio Tinto, Freeport, that could afford to do gold streams on very large projects. What they have to consider is whether or not, in terms of that cost of capital, the acquisition would be accretive or dilutive.
And maybe Trump, the government will intervene. I'm not saying I'm in favor of this, but the Trump administration said they need to start stockpiling copper rapidly for military purposes. Maybe they will start trying to secure those copper in the United States and Canada.
Presidents have done dumber things in the past. One needs to ask Mr. Trump, given the size of the deficit and given the size of the net present value of unfunded entitlements promises, what he might use for money. But I guess that's a different question that presidents seem unwilling and unable to answer.
Yeah, I agree. The U.S. government, like the presidents and Congress, have done way dumber stuff with the Smoot-Hawley Tariff Act, FDR stockpile silver. I mean, that created a mess. I think he was paying way above spot prices for silver, and a lot of countries like China and others that were on a silver standard, all that physical silver ended up here in the United States in the silver stockpile that FDR because he was paying way above the market price.
Agreed.
So maybe we'll see something similar. Unfortunately, Rick, people just a lot of the people in power just don't study financial history or seem to care.
You know, I suspect that you get votes by making promises that many of the voters are uneducated enough to believe, rather than being constrained by fiscal reality.
So, in terms of acquisitions, Rick, for gold mines or copper and gold mines, do you think there are specific countries that some of these senior and mid tier companies are targeting that they think is better? Say, like Canada, they're looking for the next Grapier or Greenstone, or are they looking in countries like Argentina where the tax law seems to be changing and Argentina seems to finally be more pro mining compared to the past?
I think if you're talking about base metals, you have to go where the deposits are. Um, you know, you need world-class geology, and I think capital is going to world-class geology rather than perceived political risk. In particular, the Chinese companies understand that their government has a requirement to get access to supplies of raw material, and their government is willing to use the power of the state, either diplomatic or commercial, to secure those supplies. The Chinese are acting very much the way the United States did in the 40s, 50s, 60s, or 70s, which is to say, to use the power of the State Department as an example, and U.S. commercial influence to gain access to resources in other countries. The Chinese aren't doing anything that we didn't teach them how to do. But the Chinese, much like ourselves in the 50s or 60s, have decided that the foreign policies and the domestic policies of the producing country is the country's own business. The Chinese tend to be less involved in a discussion of a country's internal politics, provided that they seize that they get access to the resources. I think the United States is beginning to wake up to the fact, and in the oil industry, we are awake to the fact that we can't extraterritorially export our values and charge people for it. The upshot of all of that is as long as you have emerging economies who are seeking to access natural resource product streams, that you will see people take political risk or perceived political risk to secure tier one deposits. Certainly, the thaw in the relationship between the United States under Trump and Congo is an example of the United States coming to recognize that the Chinese have stolen the march in the Congo, and that Congo itself is a very important source of copper, cobalt, coltan, and could be an important source of uranium. And this may signify a change in U.S. political tactics with regards to resource utilization as a consequence of Chinese competition.
Now, I was not alive during the early state, most of the Cold War. I was only like a little kid when the Berlin Wall came down and the Russian Soviet Union was collapsing. I want to get your thoughts. Do you think that right now the U.S. and China, are we seeing a lot of similarities to the U.S. and Soviet Union with like trying to secure natural resources, energy, valuable metals, and then with the technology advancement for five or six key technologies like artificial intelligence software, data centers, drones, robots, those types of things. Do you think like all this is playing out between like a new type of Cold War?
I don't think we're to that point yet because there's a lot more economic interdependence between China and the United States than there was between the United States and Russia. There was virtually no interdependence. The second thing is that the Chinese are much more formidable competitors than the Russians. Had we used our heads in the 50s and 60s, we simply would have outweighted them. Uh, the Chinese economy is an investment rather than a consumption-oriented economy. And they are making, albeit under state direction, much more reinvestment in their economy and their productive capability than the Russians were, which makes them, in many technologies, much more efficient competitors than the Russians were. One
Well, they
example relative to the United States would be their tax code. Jason, if you and I went to build a factory in China and we constructed that factory as a tilt-up concrete factory, a typical mega factory, we would expense that factory off of our current income. In other words, we would recoup the expense against our taxable income in the year that we accrued the expense. In the United States, we would amortize that over 33 years. So let's say that we built a factory for $100 million. In year one in China, we could reduce our taxable income by $100 million. In year one in the United States, we would reduce our taxable income by $3.3 million.
Well,
Do
hasn't
you,
Trump talked about changing that though? I think that's one of the things he's talked
he's
about
talked
recently.
about everything, Jason. I mean, there isn't a waking moment when he doesn't make somebody a promise.
Well, hopefully the promises for reducing taxes, not taxing the servers on their tips, and those types of things. Hopefully I mean, he did release Ross Ulbricht though, the Silk Road guy, so he has kept
Please,
some
please,
promises.
please remember, first of all, that a tax cut without a spending cut is fraud. Okay? It's easy to cut taxes. It's not so easy to cut spending. Uh, Please remember, too, and I'm not anti-Trump any more than I was anti his predecessor. That gives me a lot of room to be anti, of course. But, um, for all the talk of the fraud and abuse and the waste that they've found, and for all the money that they've shown, they passed a continuing resolution to increase the debt ceiling. And the budget that they just passed had, I think, the sixth largest deficit in history. If they actually found a bunch of fraud, where's the indictments? I think this is all theater.
Well, I think the court system is not as easy to get those prosecutions and stuff. The stuff going on now, there's like ridiculous amount of corruption judge shopping right now. It's kind of ridiculous that a small judge
Okay,
in a federal court system in DC can hold up like federal government policies.
where are the indictments? If they found the fraud, forget about the judge misusing the indictments. Where are the indictments?
So, very good question. Um, I know a lot of lawyers here, and the stuff gets blocked. Things are not as simple as they should be, unfortunately.
Theater is simple.
Well, we'll see if they actually cut spending. It looks like they are at least trying. The stuff that they're announcing with the fraud that they're finding, honestly, Rick, I never thought that they would even release this stuff publicly. I've known about this stuff for many, many years, been talking about it publicly for 10, 15 years. I didn't think no one seemed to care
I
for most
love
of
the
it.
rhetoric, Jason. Don't get me wrong. I love the rhetoric. I read a wonderful book called The Triumph of Politics by David Stockman. For reference, David Stockman was the director of the Office of Management and Budget of the Reagan Revolution. He was the guy who headed the first Department of Government Efficiency. Unlike Mr. Trump, who won by an eyelash, Reagan had a broad mandate to reduce the size and scope of government. And the triumph of politics describes and details the derailment of the Reagan Revolution within 6 months of his inauguration by both Democrats and Republicans. Mr. Stockman has written a new book called How to Cut $2 Trillion from the U.S. federal budget. I would recommend it to any of your listeners by way of reading. By the way, David Stockman will be the political keynote speaker. The author of these books will be the political keynote speaker at my Natural Resources Investment Symposium, July 7 through 11 in Boca Raton. Because I think the biggest unanswered question around the world economy is, in fact, the U.S. budget, the U.S. debt, and the U.S. deficit. Reading The Triumph of Politics makes me extremely pessimistic as to Mr. Trump or Mr. Musk's ability to affect lasting change. But I would love it if a young guy like you were right and an old guy like me were wrong.
Well, I think to add to your point, Sarah, with what Trump and Elon Musk are doing, I mean, Congress doesn't really seem interested in that many spending cuts. So they'll go on TV and talk about spending cuts, but then what? Didn't they just raise the debt ceiling by another 4 trillion? And then some of the Trump tax cuts that they were trying to pass. I know Thomas Massey was blocking this, but they were sneaking in the usual tricks with additional spending increases that most people wouldn't notice.
As was the executive, Trump, who urged the passage of the continuing resolution.
Yeah, and then he went after Massey, right? He was trying to get Massey. He was trying to get an immediate election runoff or something.
Of course, I believe Massey's an American hero.
I mean, he's very consistent with his policies and his views. So for Trump to attack him like that is kind of ridiculous because Thomas Massey's probably the most consistent person in Congress with all of his policies.
Mr. Massey would seem to be the only one who believes in the Bill of Rights.
Well, I mean, when you get into power in DC, absolute what is the old saying? Absolute power corrupts absolutely.
Correct.
So for the next round of growth, Rick, for gold stocks, sounds like finally, if this continues with the profit margins, the free cash flow, whether it's a gold mining company, a senior mid-tier royalty, precious metal royalty and streaming company, they're going to have good free cash flow. That's going to give them options for either increasing dividends, share buybacks if their stock lags, mergers and acquisitions, or investing in growth. What types of deals do you think, like Franco Nevada, Wheaton Precious Metals, World Gold, what types of gold deals do you think they're looking for right now?
There are uh, several very, very, very large financing packages circling right now. And when I say large, I mean, in the 2.5 to $5 billion range. These involve either the partial nationalization for compensation of very large mines by third world countries that can't afford to do it without selling a product stream, or they involve mergers and acquisitions, companies taking over other mining companies and needing to finance that partially by the sale of a precious metal stream on, say, a copper asset. Or they involve the construction financing for ultra large copper mines that would take, as an example, $10 billion to build. There are several large transactions being mooted now. And the way the market exists today, those transactions would either have to be done by Franco uh, or Wheaton, or they'd have to be syndicated through the whole royalty and streaming space. But there's a couple monster transactions out there to do.
I think we just saw a syndication deal in the last like 9 or 10 months, but that's for a long-term asset. That's for what the Sunshine Mine in Ecuador, but with Osisko Gold Royalty and Franco Nevada, they each put like over $400 million into the deal. But that mine's not at feasibility stage study and ready to start construction though.
Yeah, there are a couple of several transactions that are being mooted, that are being talked about on the street, that are substantially larger than that.
Well, the issue with Franco, right, is that they did something similar with Cobre Panama, right? That was absolutely massive, what one of the largest copper mines in the world, and the Panamanian government what changed the rules on them, and they didn't structure the gold stream to where they had the normal protections into that deal. So, do you think then that they're going to make sure that their next deal, if they do anything similar, they're going to restructure the deal with legal stuff, or are they just going to avoid the political risk where like so much of the revenue, the tax revenue is reliant from Panama, and then they could change rules? Do you think they're scared of that now?
I think anytime that you invest in any country, including your own, you have to be concerned about political risk. I think governments see their job as stealing money and reallocating that money to their friends. I like the fact that the Cobre Panama transaction was made subject to international arbitration. The Panamanians know they're going to lose.
Oh,
And
really?
yeah, they're back to the negotiating table.
Oh, I was under the impression that they were. Oh, though most of the experts I've interviewed, Rick, think that the mine will eventually have to restart, but
It
I
will.
don't know. I don't know when
It,
it's going to restart.
no, I mean that's a good point. It doesn't need to restart quickly, but the amount of money, the damage file from Franco Nevada, as far as I know, hasn't been filed. First Quantum would suggest that using the valuation metric that was in the fiscal stability agreement with the Republic of Panama, the Republic of Panama owes them $10 billion, which is something like $8 billion more than the Republic of Panama has.
Wow. Well, I mean, Franco Nevada, like the shares, what the shares were down 40% for a long period of time. They've since recovered. The shares at $157, but they're stuck around 110, $120 a share. We've talked about this on past interviews. You said that the share price was down 40%, but that was only a drop in what, 20% of their annualized cash flows. So, like, the shares were unfairly punished, in your opinion.
Yeah, it was 14 or 15% of their net present value, and the consequence was that the share price fell by 42%. Life gives you these opportunities every now and then. You just have to have the courage to take them.
Do you see any similar mispricings to Franco Nevada in any of the producing gold stocks right now?
I think as you come down the quality trail a bit in the royalty and streaming stocks, the valuation disparity between enterprise value and net present value is pretty extreme. So a Cisco royalty, as an example, or Triple Flag, relative to either Franco or Wheaton, seem relatively attractive. Either the valuation disparity gets arbitraged out by investors, or else the logical conclusion would be that Franco or Wheaton could grow by taking over one of those competitors. As you come down the value scale more, materiality comes into play, but certainly the royalty portfolio and the improving balance sheet of uh, somebody like Sandstorm. If you don't see it repricing once Hod Maden comes into production, I think you might see somebody larger bid for them. There is inefficiency in equity markets right now, which is very commonplace in secular bull markets, particularly in secular bull markets and cyclical materials. What you see is that when the commodity price action attracts the generalist investor to the narrative, the generalist investor is attracted first to the biggest and best companies, and those companies outperform their peers. Either then the market begins to arbitrage away the valuation discrepancies where the big companies take over the small companies. This is very common, and this natural resources bull market that we're seeing right now is unfolding exactly as the previous three natural resources bull markets or precious metals bull markets of my career have unfolded.
And to add to your points there with the Cisco Gold Royalty, they're one of the three or four royalty companies that has increased dividends lately. So you're getting paid to wait, you're getting a dividend increase. So even if the share price doesn't necessarily go up a lot, you're getting an increase in dividend yield.
True.
Yeah, I think like the companies over the last 10 months, and we've had a big move in the gold price, but before that, like your Royal Golds, your Wheaton Precious Metals, Cisco Gold Royalties, they were announcing dividend increases before the other companies.
Which makes sense. In the producing companies, in 2023, when the gold price was increasing, the cost of the inputs that they used to produce the gold was increasing faster, which is to say the price of labor, the price of tires, the price of steel, and particularly the price of energy was increasing so fast that despite the fact the gold price was increasing, the company's margins weren't increasing and in fact were sometimes decreasing. That didn't impact the royalty and the streaming companies because, after the streaming compensation, their gross is their net, which meant that for them, the increase in the commodity price reported directly to the bottom line, where it didn't for the producing companies. We've begun to see now where the input cost inflation, particularly around energy, but also around labor costs, has moderated while the gold prices continued to go up. So the increase in the commodity price is beginning to manifest itself in the operating margins that the producing companies enjoy.
Now, you did bring up Hod Maden. So we had news yesterday. I don't know if you saw it. They announced SSR Mining announced, and Sandstorm Gold also put out a press release that they updated their capital expenditure budget for 2025. So SSR Mining is spending what, around $100 million. They already put in 50 million into construction and some of the construction early works. And then Lydia, which is one of the largest large conglomerates in the country of Turkey, they're working on securing what local bank debt financing to fund the entire construction of the mine. So there is actual progress now at Haman in Turkey.
Back in the point in time when I was the shareholder to the predecessor company at Hod Maden, I came to know the Lydia people quite well. And that's a very high quality group. I'm delighted that the Western guys have Lydia as a partner. They're politically extremely well connected in Turkey. They are the first or second largest construction company in Turkey. They also, at least the families behind it, have substantial interests in banks throughout the region. They're a great partner.
Don't they also own a lot of the power companies, electrical utilities? So they have that too. There's discounts then for them either adding like a power supply, a new power supply station, an electrical grid, and the wiring. So there's beneficiaries there. There's like cost savings there too.
They are, as I understand it, independent power producers, as you suggest. So they would probably be the logical people to build remote power should it be necessary.
Yeah, so this is for our listeners out there. Like Lydia Minichelik is one of the largest conglomerates in Turkey. So it's not like they don't just own like two mines or something. They own like businesses in multiple industries like banking and electrical utilities and construction. So there's a lot of synergies there. It's a large Turkish multinational conglomerate.
As I say, in my interviews with them, I was extremely impressed with their sophistication.
So it sounds like they're going to be able to get the local bank debt financing that people were talking about at a discounted interest rate for the to build Haman then.
I don't know about a discount interest rate, but I certainly they have a lot of sophistication. They can talk to banks from the point of view of bankers.
Well, don't they own what 50% or something? They own a large chunk of Hodman, right? So SSR owns
Correct.
30%, and they have a buy. They own like now I think 10 or 20%, but buy up to what 30%. So SSR might be the operator because all they do is copper and gold mining, but Lydia is still the primary owner of the mine.
That my understanding is that Lydia's economic interest is something like 70%.
Yeah, and then you have Horizon Copper, which was a spin out from Sandstorm Gold, so that owns the other equity chunk.
Right.
And then Sandstorm is just a pure gold stream now, so they don't have any huge capex budget there. So they managed to finally set up that transaction to where they don't have this huge capex overhang.
Correct.
So a company like Horizon Copper, then you talked about the need for copper. Do you think Horizon Copper potentially has a bright future once it gets a few more cash flowing items then? Because it sounds like we're going to need to finance a lot more of these copper mines if they were sizable, say like a couple $100 million, that they could start doing some larger transactions.
I think that's what stands between them and success, materiality. They have the overhead of a more mid-tier royalty and streaming company, but they don't have the asset base to support it yet. So they're going to have to attract some transactions and then attract the capital for the transactions so that they get scale.
Now for Sprott, I know you're a large shareholder of Sprott Inc. Didn't they just launch a physical copper trust and they have a copper mining ETF? Those are some of the new products.
Correct. The Sprott team is very excited around what are now called critical and industrial materials. I think part of that has to do with the incredible success that they enjoyed with the Physical Uranium Trust and their attention to narratives that haven't played out but are developing. The Physical Uranium Trust was a product that, if my memory serves me correctly, had, $400 million in NAV when they took it over and has six and a half or so billion dollars in NAV today. Obviously, they would like to grow the success of their physical metals trusts. And so they're looking at other places on the value chain, uh, given that their brand name historically was around their gold trust and their silver trust. They're looking to grow on the expansion of that franchise that occurred as a consequence of the Physical Uranium Trust and expand that in other places, which I'm hopeful as a shareholder for.
I think there's another company that has a rare earths trust, but I mean, Sprott, like they tend to like doing counter-cyclical product launches. So when something's in a bear market, Rick, you can go and buy up the assets cheap or launch or buy the physical commodities and create a trust fairly inexpensively. So I wouldn't be surprised to see something like lithium or commodities that are out of favor. Maybe I know they already have platinum and palladium. Maybe they'll add to the platinum and palladium trust holdings since they're cheap and hated right now.
I certainly hope that they go to war promoting the Physical Platinum and Palladium Trust. I think that that is the ripest franchise that they have for AUM growth.
Yeah,
Remember, Jason, remember, Jason,
it's kind of shocking how cheap and hated platinum and palladium both are right
yeah,
now, considering where the gold price is.
at Sprott, I'm simply the largest shareholder. I'm no longer an officer. I'm no longer a director. You know, so I can suggest, which I do occasionally, but it's up to them. I'm not there because I don't want to be there. So they're going to have to grow the company as they want it. I think they would acknowledge that I was instrumental in the purchasing of the Sprott Physical Uranium Trust. Of course, the then CEO of Sprott, Peter Grosskopf, when he was at Cormark Securities, was with Denison, the originator of what was then called Uranium Participation Corp. So, in a sense, those assets came home. That was a Sprott generated product, and it rightfully belonged in the Sprott portfolio.
I remember about 10 years ago, Sprott was not very big on royalty and streaming companies, and they didn't really like what they were doing. And I know you've always been a proponent of those. But now I think I just saw in the last like 12 to 18 months that Sprott was starting a royalty and streaming company, kind of a small one, and they went and bought what a Sabina one. They bought a gold stream or a silver stream on Sabina, but it's like 10 or 15 years away from cash flow. So I'm kind of surprised that they got into it so late.
I think they were never anti-royalty and stream. Eric Sprott wanted to make investments and speculations where he could benefit from optionality. And it was the very efficiency of royalty and streaming companies relative to the upside that he could enjoy in increasing precious metals prices that caused Eric himself to be less interested in royalty and streaming companies and much more interested in the exploration sector and the marginal producer. And given the incredible success he enjoyed with Kirkland Lake Gold, that turned out for him to be a good decision.
Yeah, he
Uh,
picked the one winning gold stock in the bear market.
Boy, did he pick it.
Yeah, Fosterville was the top gold mine for about
Yep,
5 or 6 years. I think the
yep,
top one on the planet.
yep. And so, for Eric, that leverage to exploration and leverage to commodity price worked extremely well. And as I say, institutionally, within Sprott, there was no objection to royalty and streaming. I encountered no opposition from Sprott when, in the accounts I managed and at the brokerage firm that I managed, we focused on royalty and streaming. But the guy whose name was on the door, for good reasons, um, wanted more leverage to the commodity price than is available with a royalty or a streaming company.
Oh, I thought event like 10 or 15 years ago, they'd just start consolidating some of the smaller royalty and streaming companies and package it together into like a Sprott royalty company that was pretty massive, like a mid-tier one. I thought they would have done that like 10 or 15 years ago. They didn't though.
It was very difficult for us to do that in those days. Our access to capital was mostly institutional, which meant that our cost of capital was fairly high. At that same point in time, Franco-Nevada was selling at 2 or 2.2 times net asset value, which is to say that their cost of capital was low. And if you are a high cost of capital competitor against a low cost of capital competitor, you're at a competitive disadvantage.
Oh
Uh,
yeah, Franco and Whedon cleaned up during that bear market. The deals that they did from like 2008 to 2017 were now they're cash flowing. They're absolutely incredible.
when the materiality bar for them got too high, which is to say, when they stopped being able to materially benefit from transactions under $250 million, some of the institutions that traditionally have invested with Sprott came to us and said, "Do you see a way to make money in 50 and 100 and $150 million transactions?" Which is to say, come in under the threshold evidenced by Wheaton and Franco. And I think an important part of Sprott's consideration was that they decided that they weren't at a competitive disadvantage with the second tier royalty and streaming companies, and that they could come into transactions that were below the threshold of materiality for Wheaton and Franco, both of which enjoyed a substantial cost of capital advantage over Sprott.
Now, a last question since you brought up institutional investors. It seems that the relative price strength of gold and gold stocks, especially gold stocks lately, is starting to increase, but the gold price has been strong now for the last 6 to 8 months after it was consolidating. Do you think that the generalist institutional investor, we're talking like pension fund money in the US, Canada, Europe, emerging markets, do you think that they're finally going to start allocating 1% to 2% assets under management to actual physical gold, physical silver, and gold stocks now?
I think you're already seeing it, Jason. For the last 3 years, the disparity between gold and gold stocks has been due to the fact that the buyers of gold have been foreign central banks. You can witness that by looking at the ETFs, the gold ETFs. The retail participation in the gold market until 6 months ago was non-existent. And the foreign central banks didn't buy gold stocks. So the price disparity between gold, which the central banks bought, and gold stocks, which they didn't buy, was obvious. There, in the last 6 months, if you witness inflows and outflows from ETFs, there has been retail inflows of capital into both the physical ETFs and, probably more important, into the precious metals equities ETFs. I would suggest to you that suggests that we are in a much broader based bull market than we believe.
So this means then that base case now we're going to start to see more of these generalist institutional investors, so pension fund money, institutional investors start to dollar cost average in gold stocks. Do you think that that's what's going to happen going forward now?
I don't know the answer to that. I think you will see broader participation for both institutional and retail investors, passive at first, but I think it's already underway. You are seeing consistent weekly inflows into the largest and most liquid ETFs. The
Okay,
money
so
thus
you're
far that's
by
flowed into the ETFs is mostly flowed into uh, names that are appropriate to passive vehicles, which is to say Wheaton, Franco, Agnico Eagle, Newmont, names like that. But make no mistake, that money will come down the quality trail.
Okay, so by passive for our listeners out there, you're talking about like gold mining stock ETF, say like the GDX, the GDXJ, the two ones that Sprott, what the Sprott Gold SGD, yeah, I can't remember the initials,
But
SGDM.
by the way, Jason, I need to drop off because I have another call right now.
Okay, well, I think we covered a lot today, Rick. It's an exciting time. I think there's a lot of good free cash flow to be made here by a lot of these producing gold companies right now, especially the royalty and streaming companies. I think we're going to see some good dividend increases with the free cash flow.
Great. And once again, any of your listeners who like what I had to say about resources and want to check it out personally, go to my website, ruleinvestmentmedia.com, list your natural resource stocks. I'll rank them for free, no obligation. Ruleinvestmentmedia.com. Be patient, by the way. I'm about 200 rankings behind. Thanks, Jason.